Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you this week. It's so nice to be fully on our streaming platforms. And I'm getting double audio here, so let me fix that. There we go. Now we're all set. Sorry about that. First and foremost, we need to cover off our disclosure disclaimer agreement. If we've attended any of our live sessions previously, then we've seen this. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We have this available on our website at all times, so please feel free to read it in detail at your leisure. But that's the main point to take away from it, so feel free to take a screenshot it if not. Other than that, I'm very excited to get into this session with Mr. Roy. We see all the job openings fell again, and perhaps that's a sign of a weakening labor market. Are we done talking about rate hikes? Who knows? We never know what to expect in these meetings and what's going to come out of the Fed's mouth. So let's go ahead and, without further ado, get to the good stuff, the man of the hour, who we're all here for, Mr. Rob Roy.
Howdy, Zach. Welcome, everyone, to TradeFinder Live. Hope everybody's having a good start to their Tuesday. Love doing these live. We got a couple things of interest to show and talk about regarding the markets. Do want to mention what you talked about back as far as the JOLTS report showing that fewer job openings, and so perhaps that means that the labor market is weakening a bit. It's a tight labor market when there's lots of openings and not enough people to fill them. But if the openings go down, then it's a whole supply-demand thing. Perhaps that takes a little more pressure off the Fed thinking about any sort of rate hikes. I don't know if we're quite to the point where we're done talking about them, but with basically inline PCE report on Friday, then followed up by the JOLTS report, perhaps maybe we can at least not have the Fed speak that we've had with the Fed governors coming out saying that they're not afraid to raise hikes or rate. Let me try that one more time. Give rate hikes if needed. So we'll see how that plays out in the markets. We take a look at the chart. Yesterday we were looking at this chart of the SPY in our EWO Trader Live for our alert subscribers on Mondays to start the week. And at the time we were doing it, we were below this 525 level. We needed to see if we could get up and close above it, which we did. So we're holding right at this really important level, at least in my opinion, of 525. You can see we're currently trading above it at the moment, even though they're slightly down for the morning. But that's going to be the key. We did avert this second close below that level on Friday when we had that tamer PCE report, and then followed that up yesterday. Can we do it again today? If we can stay above this 525 level, then perhaps we are set to start to move up towards this level here around 550, getting up into that area of where the C wave extension is on the zigzag that goes back here to the the January lows. And what's interesting now is if I take this arrow off for now and bring over where the wave 5 is, you can see that now we're kind of in alignment with that C wave extension right at the bottom end of that forecasted tap box time and price projection for the wave 5. You like it when those agree. In other words, in following Elliott wave, when you have more than one Elliott wave target price, just from common sense, seems like that would give you a higher percentage chance if you have more than one at the same forecasted level. And that's kind of where we are now. And as you can see, looking at this wave 5, it's out right around the election time. And if you're familiar with election cycles, that plays a big part into the markets, at least as some people believe. And while we're talking about that, I wanted to bring to your attention, I'm going to switch the screen here for a second. I believe Zach can put this link in for you. I'm going to hit remember to hit control refresh here, or shift refresh. See if I can make Ryan proud in the background there on doing the shift. I have a big upcoming report that I wanted to make you all aware of. It's the AI Trading Outlook. We're going to do this Thursday night at 8 p.m. It's completely free. and Zach put the link in there. So I'd like for you to go through and take a look at this and sign up for it. There you can register to attend. All we need is your email and name. Again, it's free, but we're going to talk about a number of different things. We're going to talk about AI, what AI sees for the markets the rest of the year. And as we scroll down, we're going to talk about some specifics as well. We're going to talk about where I think the market may go for this year. We're going to talk about Buffett's indicator, which is giving warning signs. If you're not familiar with what the Buffett indicator is, we'll go through in detail and explain that to you as well. And then we're going to talk about what election cycles mean for the markets. I think you might be surprised to find out it's not, at least the data, what the common person thinks or what's commonly viewed as where the markets go during election cycles. So we'll go through and talk about that. In addition, we're going to go through and talk about how AI can give you a multi-strategy approach. 3 interlocking strategies where you can look for sideways, breakouts, or directional trading. We'll go through and show you what the track record has been. We do feel like we're the market leaders in having a track record of AI already into a technical trading system. We've been doing it for a while, so we'll give you those results as well. And you can see the impact and the power that AI has in any sort of technical trading system, regardless of what technical trading system is that you look at. We'll go through and talk about our record, which, as I said, has been pretty impressive. But we can cover all market conditions with AI, not just up or not just down, but up, down, sideways, the 3 different ways the market can move. We'll cover those in detail and show you the power of integrating AI into your own trading. So we'll talk about what it's saying for the markets. We'll cover off those subjects that I mentioned that I think are really pertinent to where we are right now. People always ask about an outlook. I did an outlook back before COVID came out, and one of the black swan events that we talked about was COVID. And I kind of nailed that one. Just a little bit of a pat on the back. Nobody had really heard of that. And then just had done a little research on this little virus that was showing up in China and how that can impact the markets. And boy, did that come to fruition with the big pandemic. We didn't do an official outlook this year for the year, but we're doing it now. And so we're going to use AI to save that one that I got right there. We'll let AI help us guide where things are going to go, and then once again talk about these important variables moving in the market. So as I said, it's free. It's 8 p.m. Eastern time on Thursday night, and all you have to do is go to this link that's provided for you, put in your email address and your name, and you'll be registered to attend. And as you can see that so far we've had 19 winning months in a row. So it's something that you want to take a look at and see. I think it's well worth your time. So go ahead and sign up for that now. Make sure that you have a spot registered. As you can imagine, we can't have everyone on the planet doing it, and we've got 43,000 subscribers on YouTube, so can't have everybody. So make sure you reserve your spot early. So go ahead and sign up for that. All right, so with that, I'm going to go ahead and switch back over, talking about the dollar, and then I was getting ready to talk about the Dow because the Dow had been really problematic going into the end of last week, where we had the market basically gap down a couple times, which is a little rare to have back-to-back gaps on the Dow. And then we moved into this triangle formation here. I mentioned that the wave 5 completed, went back to the previous 4. So we do have a tale of different patterns. Once again, I call this discombobulation. When they get like this, they usually come back in line they did before. So now the question becomes, which one is right? Is the Dow leader? Does the S&P need to correct too, and the Dow's just kind of doing this first? Or is it just a different scenario here, and the Dow is going to start a new impulsive pattern? But we can say that this current one was completed with the move back to the previous 4 and this triangular consolidation. That's all really pure Elliott wave stuff and exactly what's supposed to happen in the world of Elliott wave. So with that, we will just see which of the patterns plays out. Let's look at the other ones and see what they look like. And then we'll look at the VIX too, because I think people want to know what's going on with the VIX. And with the Qs, this one surprised me. a little bit. You can see that we still have a nice little fib retracement set up here. That's what the shading area is. Another cool feature of this software. And if you haven't gone and gotten a copy of the software, go to hub.com. It's the new platform from the Hub organization, best Elliott software that exists, I think, with lots of cool new features that are being released all the time. It's in beta form, and so there's nothing to download. It's all browser based. Get yourself a copy of it if you haven't already. But you can see how it shades this. Not only does it shade it, but it shades it in different degrees as we move through these fib levels. So the point here is if the wave 5 is done on the Qs, because that one did extend more than 100%, we're only looking for a 61.8% correction, not a move back down to the previous 4 like the Dow did. But we would want to see a retracement back to the point of this triangle, because that's, again, classic Elliott wave stuff. So that could all play out, right? I mean, that's right around in the area where the 61.8% correction would be moving down. But that has to show as a correction first, and it may not. We may continue higher. I mean, what could happen, that 5 could relabel to a 3 as it extends so much. So we do have a tale of different markets right now, and that's less comforting when the markets are like that. But you just keep watching them all and see which one is indeed the leader. So is the Dow the leader? Are the Qs the leader? They're further along than the S&P, so they're all different. And then if we take a look at the IWM, that one is kind of in no man's land a bit. We went up, tested that wave 5 right up to the 210 level. Couldn't break below it. Thought maybe with that PCE report we could move higher, but no, look what's happening today. Moving lower here, not a real strong sign of risk on in the markets, but we know the IWM does its own thing anyway, and perhaps we need to move back down and test this support level down at 190. We've talked about this for months, so I don't think I need to review that for you. The key here today is that we are below the 50-day moving average, and if we close there, it matters. Going back here, you can see we closed below it, but again, no follow-through back above the 50-day moving average. Are we going to close below it today again? And then we'll be looking for that follow-through day. And if we do follow through, then we're at least coming back to the point of this triangle, which, as I mentioned, is classic Elliott wave action. And if we get down to that point, would we really stop before going down to 190? So we'll keep an eye on the IWM and see. It seems to be the weakest of all markets right now. And if you are a believer that the small caps are a sign of risk on, risk off, it does show that there's not as big of a risk tolerance in the market in general as there was before. I think it's kind of a stock picker's market. And that's where our AI assistance comes in and helps us out a lot. Let's see what the VIX is doing. You can see the chart of the VIX. We did have that breakout. Once again, a small triangle. This one was an expanding triangle, but they still break out. We broke out exactly what would have been forecast from the width of the triangle. So that's done its thing. And it looks like the VIX is coming back towards the point of the triangle, which is around 12.5, where we've spent a lot of time this year, as you know, bouncing off that level. As a reminder, 12.5 doesn't have to be the low. It has been this year, but if we go back historically, we've been down at 10 or below during big market rallies. So we'll just see if we do test 12.5 or hang up in this area. But the breakout has already happened, so we don't have to have a higher move in the VIX. We could have one, but we don't need one to satisfy the breakout rules from the triangle. I hope that makes sense. Yeah, lots of different things going on in the markets. I did mention to you that there was stuff going on right now in Bitcoin land, and there you can see we do have the cryptos now. If you go get the beta form, you won't have them right now due to the fact that it's for us first, and then it comes back to everyone else in the beta form. And you guys get a chance to see what it looks like on your end. But we go through and make sure there's no bugs, and then it's up for you guys to go through. And if you find anything, just hit that support button. That's what beta's for. And we're trying to do our best to make sure the programmers are that this is as bug-free as possible when it's officially launched. With a brand new piece of software, this has been programmed from scratch. There's always going to be little things, but know what's happening here in Bitcoin right now. We are breaking above 70,000. We tried back here in the middle of May, and we couldn't do it. And so now here we are in June, and we're trying again as we speak. And so if I switch over and look at the 3-minute chart, you can see that we got up to 71,000 just a few minutes ago. And now we're coming back down again, but we are holding above 70,000. The key will be, can we hold that throughout the trading day? Can we close above 70,000? And then again, the follow through rules come in. But pretty interesting right now that at least we're giving it a try once again. And maybe this is where Bitcoin takes off. Those that know cryptos more than me tell me that this consolidation after a halving is normal, and then you get the breakout move. Let's look at Ethereum. That's the one been in the news with the approval of the ETF. It's trading a little bit higher today, but it's got to get above 4,000 before it gets above its big resistance level. So it's not there. Bitcoin is, at least for right now at this moment, but Ethereum's not. So we'll see how that plays out. Another interesting thing to talk about today is oil. Look what's going on in the oil markets. And I find this interesting with the amount of travel that I've done lately. The traffic has just been enormous. So people are driving. We're moving into the all-important driving season. Certainly, this will be welcome at the gas pump. I don't think it's going to be welcome over at OPEC. And I made the comment that I don't think that OPEC will let oil go too far down before we start hearing rumblings of production cuts. But once again, the triangle coming through, and just as a reminder, it's part of that outlook that we're going to talk about is triangle breakouts. You can see another expanding triangle that broke out, just like the VIX did. Both of those broke to the downside. So now we see if oil comes down to its bigger support level here of 67 and a half. There's a little bit of support, not a whole lot, but a little bit right in this 72 and a half area. But breaking 75 was big, and that's why you see this big move lower, because 75 has been a level to stay above for quite some time. So do we make it down to 67 and a half? If we do, I do think we start hearing at least jawboning, if nothing else, from OPEC on potential rate cuts or production cuts. So just kind of interesting to me. Could be a reflection of the consumer weakening a bit, not spending as much, the jobs report, etc. But moving into the peak driving season, as I mentioned, just a little surprising to me that we're getting this big of a move down in oil. So we'll see how that ends up playing out. Got a couple of gold stocks to look at, and of course we want to look at SLV as well. GDX, the miners, gold's not doing too well today. Didn't want to see that break below 35. It did. We'll talk more about that when we review our case studies. Some of you have asked about EGO on the YouTube channel at Elliott Wave Options on YouTube. And this looks like an interesting place to play gold if it wants to turn and head back to the upside. It's testing support right now, so that's pretty tempting. If it can hold that level right here at this 15 and a half range, if we can stay right in here, then maybe this one would be a good way to play gold. Let's see if silver is following suit. It is, as you would imagine. So all these are breaking through areas that were at least short-term support. Now we're back down to the top of the A wave on the zigzag pattern in silver. Do we have to come all the way down to the 50-day moving average? Maybe. It seems like it kind of wants to go down there. So I think I would be cautious on the metals right now. Perhaps we get another really good entry as they correct that vertical move. This is why I said we didn't want to chase this move back here when we went vertically up, and it just looked like the metals were going to go into the stratosphere. What goes vertically up oftentimes comes vertically back down. So that's playing out in the metals right now. So let's see if we can get some stabilization in here, right in this area, right through here. Just a little below that A wave high that was basically on one day there is some support. Just a little bit lower than where we are now. So it wouldn't be out of the question to see us come test this 50-day moving average, but kind of stay in this consolidation area over here. So let's watch the metals for a while before we get too excited about doing anything moving forward. So let's go through and look at our previous case study considerations. We looked back on May 7th at AXTA, and yeah, that one's holding in there pretty well. We talked about this 50-day moving average. We talked about holding in this area here of support that we needed to hold there, and we did. So we bounced off the 50-day moving average. So we're gonna keep on this one. We'll keep watching it, see if we continue to move to the upside here on AXTO or AXTA. Moving forward. So that one's okay. We'll leave that one. So GDX that I briefly mentioned before, we have to watch and see if this 50-day moving average holds. If we break below that, then we're coming all the way down to 32.5, and we just close that one out and just take the loss and go. It's hard to imagine that we are going to look at least at some point, even if it's at the end of the year, towards rate cuts after the election and not have gold turn and move back up. But maybe it's telling us that watch out for that chart of the TNX, that wave 5 pattern. Maybe we are going to get some inflationary scares again. So we'll keep an eye on this. But this one is close to, we might want to take that off. But let's give it a chance to hold this 50-day moving average and see. And then last week we posted this, I believe, just as a post, and thought that it was going to go down to 134.40, and we actually went almost exactly there, just a little bit below it here at 133.5. So that one worked out really well, and so we're going to take that off. That did what it's supposed to do. So we're going to take UPS off the list. So that just leaves us with AXTA and GDX. AXTA doing better, GDX something that we have to watch. But UPS did exactly what we thought it was going to do, right down to that level. And then look, it kind of bounced there. We opened, went right down to our level, and then took off back to the upside and hanging in there. And you would think that if oil prices continue to come down, maybe that stops the bleeding in UPS. So what would weigh things out? The cost of fuel or consumers buying less and not as many packages, not as many trucks to deliver. You can kind of see kind of a move back and forth there. Which one's going to play out? That'll be interesting to see. But for us, it doesn't matter. We finished that off, so we're done there, and we don't need to look anymore at UPS. So that one was a good one. Did exactly what we thought it was going to do. So I do want to look at a new case study consideration for today. RY, which is one that we had done before, has showed back up on the AI search. And it's right at the level 75% that we look at to send out an alert. So we're going to make this one our case study for this week. We actually already sent that out as an alert to our alert subscribers at evotrader.com. So we'll follow this along here on TradeFinder as well. If you are an alert subscriber, you don't need to do it twice, just to be clear there. But right now, we had gotten a little bit in front of ourselves. The first target had been 110, and that's right where we went. So the AI nailed that target spot on. And now we've pulled back because we had that separation from the 10-day moving average. You know that rule. No security in any time frame gets too far away from the 10-day moving average. So now we're back here towards the 10-day moving average. We're right at that A wave high. And what's interesting here is this zigzag pattern with the B wave exactly at the 38.2% level brings you to 100% extension just above 113. And this little red line that I've drawn is the new AI target on the second release on RY. So the AI is really liking what's going on at RY up in Canada, the Royal Bank of Canada, and that's at 113. So they're almost identical, the C wave extension being just a touch higher. But once again, as I mentioned earlier, I like it when you have more than one Elliott wave pattern, in this case, an Elliott wave pattern and AI, giving you roughly the same target. It's just common sense again when you have more setup showing you the same thing. It puts more probabilities in your favor, knowing that nothing ever gets to 100%. There is no such thing. But it's nice to have these moving higher here. So that's going to be our idea. We're going to make this one an idea as well because of the AI score, and the timing looks pretty good to get back in. So this would be a new RY position, not the one before, because it's given us a new and higher position here. I did want to talk about Roaring Kitty. We had right there on the initial screen coming in, Roaring Kitty with a question mark, obviously not having the same impact in the news all over the place. And I just really smelled this one out when over the weekend it was posted. It was on his page, whatever, and it showed an account statement, very cryptic post talking about a massive position in GameStop. And I just felt like you've heard me talk about this before. All of this meme stuff, the retail public does not have enough power. I don't care how many people you get behind you to create this kind of volume that you see here. This is where the institutions follow along with that, and they jump in. And if you looked at the position closely, you could see that Roaring Kitty was losing on this round of the GameStop position. And I felt like perhaps that was some sort of a setup for retail traders in order to help him get out at a lesser loss or maybe even a gain. And note that the high of the day yesterday was the open. And then we just sold off from there. And then we're down a little bit again today, coming back down to fill this gap. So not the same kind of effect that we had before. This smelled like a setup. And I feel bad for the retail traders that bought at the open yesterday, thinking that we were going to get another one of these spikes. And all we've done is come significantly lower since then. And I would venture to guess, I don't know this, that Roaring Kitty likely sold at the open yesterday, especially if the position was that big. And so that was perhaps taking gains at the expense of the rest of the retail traders. So please be careful on these things. You've heard me say it before. I know greed kicks in. I know we all want to see these big, huge moves. Yes, some people made money the first time around during the pandemic, but a lot of people lost a lot of money. And this one looks even worse here. And so I'm sure there'll be investigations there. There's chatter about it from some of the institutions looking into it a little bit further with such a specific post of an account statement, et cetera. But anyway, just wanted to bring that up. That didn't go out as planned for retail traders that jumped in, but it may have gone exactly as planned for Roaring Kitty. We'll see. But anyway, just be careful in the meme space, please, and just stay in things that don't have these unbelievably wild moves where big losses can occur in very short periods of time. So just wanted to mention that because it's all over the news, and I'm sure people were asking about it. All right, so with that, Zach, we'll go ahead and take a few questions if there are any, and then you can go through and show folks how to post that RY idea.
Absolutely. That sounds like a great plan, Rob. Let's go ahead and get to some questions. We definitely have some that came in, I think, that might have been discussed right when we lost connection. So just in case, can we go back over Bitcoin just for a quick refresher?
Sure. Bitcoin is trying to break above 70,000 right now. Can it do it? It did it for one day back here in mid-May and fell back down. And now it's trying again. And so it didn't have the follow through day the first time. So the same rules apply here. If we are able to close today, and I know it doesn't close, it trades, so I get all that, but you get an end of day print, so-called end of day print when it rolls over to the next day. So that's what we're watching. And let's go back and see what it's doing here. I looked at the 3-minute chart as well. Seems to be maybe stabilizing right here at the 50-day moving average on the 3-minute chart. But the key will be, can we, with the technical close, get above 70,000, and can we follow that through tomorrow? If so, then maybe, just maybe, Bitcoin is off and running from its post-halving consolidation. It was a nice consolidation here. You can see it's a pretty well-formed triangle. It has not seen the breakout yet, but that may be occurring right now. So we'll watch that. But that's what's going on with Bitcoin. Let's see as we go through the rest of the day into the evening, can we at least post the print on the rollover right at or above 70,000?
Thanks, Rob. And again, apologies if any of these are duplicates, but I just want to make sure that the questions get through for anyone that might have not been able to attend during that time that the question was discussed. Have you gone over the Buffett report?
I talked about that in the preview to Thursday night. So I'm looking at that AI trading outlook that'll be doing Thursday night at 8 p.m. Eastern time. All you have to do is go to the link provided, sign up for that, and we'll be talking about the Buffett indicator. So I'm going to save that for Thursday night because that's one of the things we're going to go through and talk about. Some people may have heard of it. People may not know exactly what it is. I'm going to show you exactly what it is and what it's showing on the charts. So yeah, we'll discuss that in detail Thursday night.
Awesome. Thanks for that, Rob. And I just put that link back in the chat. So make sure to take advantage and click on that. It's free to sign up, and we hope to see you there. Let's go over to Amazon.
We haven't looked at Amazon in a while, so let's take a look and see what Amazon is looking like. It'll be interesting to see if the consumer news is going to affect Amazon or not. You know, they're out there in front, so maybe they don't have as rough of a time. You can see that we are below the 50-day moving average. We have had a bearish 1030 cross. None of that's positive. So you have to actually look at Amazon right now with a slightly negative view and wonder, are we going to come down here to 170? Is this wave 5 over and we need to come back to the previous 4? There is support at 170. It is trading higher right now, but for the negative outlook to be reversed, it's got to get back above that 10-day moving average. And then if you're a little more conservative, you would want to see not only that, you would want to see that 10-day moving average break back above the 30-day moving average. So you'd want to reverse this negative 1030 cross and go back to a positive or bullish 1030 cross. But first steps first, and the first step is we need to get back above 180 and back above that 10-day moving average. So slight look negative here on Amazon, but that could change over the next couple of trading days. Below the 50-day moving average is not where you want to be.
Well, Rob, what's going on with the housing market? I know what it's like near me, and I can only imagine it's around the same near you. So let's check out XHB.
Yeah, a little surprise here today. Nothing before this surprised me. We had a run up, then we got the tick up in rates. So XHB went down. That's kind of hand in hand. We should get another little boost if we do start talking about rate cuts again, even if it's at the end of the year. But with the fact that rates have stabilized a bit, we got some consolidation here for about a week or so, right around 105. That all made sense. But rates aren't screaming to the upside today, and yet we're getting a downside breakout, or downside break from consolidation, not a breakout, but a break from consolidation today. So where does XHB close is going to be key. And if it does close lower here, does that mean we're going to follow through back down and test 100 again? So we'll have to keep an eye on that. I thought everything made sense until today. Today doesn't make a whole lot of sense unless we were seeing a big jump back up in rates today, and we're not seeing that. So that one's a little bit confusing as to what's going on. So perhaps we just need to test support at 100 again. That'll be the key. If we hold 100, I think we're okay moving forward. But a break below 100 changes the whole narrative, because that would move this wave 4, and you'd have to reset the whole pattern. So if the current pattern is going to hold, we need to see the XHB back above 105. So a little surprising to see what's going on in the home builder space today. Once again, with rates coming down post PCE and then consolidating, and all that made sense. But today doesn't, unless there's something that's about to happen back to the upside in rates, and that's going to be bad, not just for the home builders, but for the equity markets in general. If you're bullish, if you're bearish, it wouldn't be, obviously, but if you're bullish, it would be. So we'll have to watch that 100 level very closely.
Thanks, Rob. Yeah, you mentioned the equity markets there. And again, this is going back to the beginning of the stream when you covered just the general SPY. Would you mind giving another succinct rundown, overall synopsis of the SPY?
Yeah, it's pretty basic right now. We talked about this yesterday, as I said, during Ewo Trader Live for our alert subscribers at ewotrader.com. At that time, we were trading below 525, and we wanted to see if we could get back and close above it, which we did. And today we've hit right at the 525 level on the low and are trading above it right now. It's going to be the same scenario. We need to continue to stay above 525 on the S&P, and if we do, or SPY, and if we do, then perhaps we can extend this wave 5 higher. A break or a close below 525 today doesn't mean anything. We have to have that second day or follow-through day. But if we get that, then we have to start looking at, well, we might be coming back to the point of this triangle and maybe even all the way back to the previous 4. But we're not there yet. We're looking at 525 right now. Where do we close today? Can we hold that level and close above it once again? And as long as we can stay above 525, you can still be constructive for a move higher in the markets. You can see that on Friday with the PCE report, we did have a big volume day to the upside. So that was a good day that got us back above 525 on strong volume. Yesterday, decent volume. And then today, it's still early in the trading day. Technically, we're down on the day, but hit 525 on the low and are holding above it. So we just have to watch 525. That's the key on the SPY.
Excellent. Will would like to take a look at INDA as it's down 6%.
Yeah, they're in the middle of elections. That's what's going on there. And so that certainly created a big downward move on the INDA. And there was that zigzag that completed. It went all the way up to the 161.8% extension, which was really amazing. But with all the election stuff going on, I think this is a time you just sit back, let all that play out, let all that calm down, and then see what happens from there. Since that wave 5 went past the 100% level, that's again, once again, where we start looking at, okay, where's that 61.8% corrective level going to be? And so we can use this fib tool, give us an idea of where that might go. Around 61.8 would be somewhere right in the area of where we are now. I got too many patterns on here at the moment, but right around this 51 level, which is where we're trading right now. So perhaps that's where we hold and we don't move any further from there on the INDA. But it's all election stuff is going on there, and we may see the exact same thing in our markets when we get to the elections. Once again, another idea of why you want to attend Thursday night, as I'll talk about these kind of scenarios, what occurs around elections, at least historically in equity markets. And you're certainly seeing that play out with the elections in India.
Well, you got INDA up there. Let's go ahead and change those first 2 letters to NV.
Nvidia. Well, I think we may have gone like maybe two live sessions in a row without looking at it. So we might look at it.
Yeah, sounds about right.
Yeah. Um, there was news that Elon had diverted some of those NVIDIA chips that he had ordered from Tesla over to X. So I don't think that had anything to do with it. And it was just an interesting news bit. But you can see that NVIDIA is hanging in there pretty well. I've mentioned this before that even though it would have been tempting back here on the gap, people were talking about maybe shorting it to come back and fill this gap. And I noted that I don't think that's a good idea going into a stock split, a 10-for-1 stock split. People just aren't going to sell the shares. Moving into a split, why would you? It doesn't make any sense. So we'll see what happens after that split. It splits, I think, after the close on June 7th and starts trading post-split on the 10th, so Friday, Monday. And then we'll see if Nvidia can still hold these gains. So be cautious on Nvidia. I think we just churn here. If we do sneak higher like we're trying to do today, just a little bit, I think that's all you get. So let's let that split occur. See how the stock handles the split, because oftentimes, especially when you get big splits like this 10-for-1 split, people that own the shares, and especially when you've had a massive run up like Nvidia's done, what people will tend to do is sell some of their shares, book some of those gains, but then hold some of them. So you might get a quick move to the downside right after the split. And then once that plays itself out, then oftentimes the stock turns and goes back up, because why do companies split their stock? They do it to make it more attractive to the majority of traders rather than having to spend $1,100 for one share. You come in at $100 or whatever it is when it's trading at the time. But people tend to want to buy right at the open post split. And just as a reminder that oftentimes there's some selling that occurs with these big splits right then. I don't know if that'll happen with Nvidia. We'll see, but just be careful. And let's see what happens Monday, Tuesday, June 10th and 11th after this big split, how it acts, and then maybe there may be another entry. But I will submit to you that after big splits like that, you don't see these kind of runs. Now, Nvidia may still go higher if there's enough long-term belief in the stock and it brings in a number of new traders that wanted to trade it and couldn't do it before. So it could still go higher, but you just don't get the velocity on the moves following big splits like that. There's too much supply now. Remember, everything's supply demand, and there'll be so much more out there, then it's harder to move the stock, especially if it's just on the retail side. It'll be interesting to see if any institutions step in and want to buy it at the lower price, or if they're going to be some of the sellers that have already enjoyed this run. So there's a lot of question marks around what happens post-split on Nvidia. But going into it, I think we just stay status quo. This same kind of consolidation that we've had over the past week, I think, continues into the 10th of June.
Very well. Thanks, Rob. And I see we're coming up at the hour, about 2 minutes away from it. We usually end right at 2, but due to the unforeseen connection issues, how about a couple more symbols, and then I'll show everyone how to post that idea for RY.
Okay, let's do it.
All right. The first one is going to be here from Thomas. Can we take another look at Cava, C-A-V-A? Last week took off on earnings and looked to have a follow-through day. Expected to see a move to 100, but now below 90. Will it now fill the gap from earnings?
I don't see a gap on my chart with our data feed, but it just got above the 10-day moving average. It doesn't mean that it's still not going to go to 100, but remember, you can't forget that rule. No matter what's going on in a stock, no security in any time frame gets too far from the 10-day moving average, and we got well above it up here. You can see that we've held, at least so far today, the 10-day moving average on the low of the day, and we're trading above it. I don't think really this changes anything other than it needed to come back down a bit, gather itself. And then as long as we hold this 10-day moving average, I think moving to 100 is still extremely likely. We'll see if that plays out. But the key here is holding the 10-day moving average. But the fact that it's moved down from here, I don't think that takes the picture of a move to 100 away at all. It's just correcting what was an overbought condition. Simple as that.
Very well. Thanks, Rob. Well, with all this chatter around Roaring Kitty and, of course, GME, it seems like it might be fitting to pass this last symbol through to you as AMD from Bravo here. Curious if you guys can look at that as it looks weak.
Yeah, they're not in the middle of a 10-for-1 split, obviously. So that's why I'm saying it's going to be interesting to see what happens with Nvidia post split. Can it maintain that strength? But the key here is, even though we've seen quite a bit on AMD, we are right in an area and building an awful lot of support resistance in the 150 to 160 range. You can see how 150 is support, 160 is now resistance, and we're trading right through that 160 level, have been for a couple of weeks now. We did finish this wave 5 that was less than 100%. It's supposed to go back to the previous 4, which it did. So that's done. So AMD is acting an awful lot like the Dow, where the wave 5 is confirmed complete because we retraced back to the previous 4, and now we're starting a new pattern. So we're waiting on the algorithm to identify what the next pattern will be, and so far it's just in corrective mode. Another thing that's quite normal following the completion of a 5-wave pattern is you correct for a while before the next pattern starts. So I think AMD is a sit on your hands right now. Even if it continues to break down, which it is already today, if that continues, can it hold 150? So we're in a range here between 150 and 160. I don't think I would short it now. I don't think I would go long. I would short it if it breaks below 150 because that's a pretty level of support. And I would be interested in going long if we can get above 160 with follow through. And that would need to be, that we are starting to hear rumblings on a rate cut at the end of the year, et cetera, rather than all this Fed speak on they wouldn't be afraid to raise rates again. So right now, I think it's a wait and see on AMD. It's kind of a trading range. Might even make sense to do something sideways in that range, at least until it decides to break one way or the other. But yeah,
Thanks,
that was
Rob. Yeah, looks awfully different
really.
from the AMC chart, huh?
What's that?
I said the AMD versus AMC chart very drastically vary, I would say, if you were to
Yeah,
pull that one.
yeah, one
All
less
right.
makes a huge. So
All righty, let's go ahead and post this idea. And to confirm, did we want to do an idea or is this going to be a post for today?
we'll do an idea because the AI score was high enough.
Very well. Yep, that's some good confidence there. So I believe everyone should be able to see my screen now.
Go ahead and flip your screen share over, actually.
Just kidding. 1 second. And how about now?
Got it.
Awesome. All right, so hopefully everyone can see that now. And so we'll see here we're at a menu view, a jumping off point, as I always like to say, for all of the different features that this platform has to offer. With this session, let's go ahead and go straight to the ideas. And as Rob mentioned, it is a high AI score, so there's a lot of confidence that Rob has in regards to sending out a position on this, aka posting an idea, whereas a post would be more of a draft idea. Again, for those that have attended are probably familiar with me saying this by now, but for anyone that might be joining us for the first time, I always like to reiterate that a post is like a draft idea. So view it as like paper trading for both the idea and the post, honestly, because there's not really any risk at risk, any capital at risk between both of them. But for a post is that's viewing it as the stage right before you're about ready to submit that position or that idea. So Rob, again, is confident with this one for RY. So we're just going to go RY to the upside. And what's the price range there, Rob?
113.
Got it. And the time frame. I lose you?
No, just bringing the chart back up and um, to show how to do the customizing, and I would say 2 months.
Okay, yeah, I was going to say that's a good way to highlight this feature functionality here. So we have the intervals that are already set between 1 week, 2 week, 3 weeks, and we jump up to the months. If you need something that is in between those time frames, then we can go to down to the very exact day. And so, sorry again, Rob, you said what was the date on that?
2 months. So let's go somewhere in the first week of, go on the first Friday of August.
You got it. So that's going to be August 2nd. As you can see, that is 58 days from now. Here is where we will come to make it look pretty after this session is over. We'll have a lot of analysis and, again, include that AI score that Rob is feeling confident about for this post. Other than that, we appreciate everyone for sticking with us for this rough connection session. As we said in the beginning, there's just only so much we can control in this digital age, and connection and bandwidth, unfortunately, is not one of them sometimes. And so we appreciate everyone understanding that, and we appreciate everyone that stayed along to come back after we got back online. So I'll pass back over to you, Rob, to wrap things up, and it was a pleasure.
Yep, pleasure as always, Zach. And for those of you that didn't join us live and are watching the recording, still please take advantage of signing up for Thursday night. I think you're going to find it enlightening. We're going to talk about a lot of very important subjects and talk about how AI can help you across the entire realm of trading up, down, or sideways. So it's going to be a great session. Love to have you there. It's free. Just need your name and email address, and you're registered. We look forward to seeing everybody there on Thursday night at 8 p.m. Other than that, enjoy the rest of your day and watch that 525 level. See if the S&P can close above it once again today. Look forward to talking again soon. Take care, everybody.